Hey everybody, this is Paul doing a quick portfolio update. Um, as it stands, doing pretty good. You notice I'm definitely my account value is higher, so the number that's going to be on this video is going to be higher, but probably about, I want to say, I would have to look at my previous video, but I want to say it's up by the last video I did. My total account value, this guy up here, was 47,116. So as promised in my last video, I did get the Biden stimulus this time around, and I invested it. If you follow me on Twitter, if you can get past my political post, every once in a while I'll throw in a stock related post where I ran about different stocks. Um, so basically, what I did, so I took probably about I believe it was 55% of the stimulus and I invested it. Um, I didn't do any YOLO bets. So basically, I bought $2,000, 2,000 of O, Realty Income Core, and then also over here, uh, basically roughly 1,000, give or take a little. Any extra I have over here, I try to throw it in like the AT&T or like this guy or something like that. Um, and let's see. Let's just kind of go over what I've been doing all month because my account value has gone up significantly since I did the math on it. I think since one of my videos, I I think this is my video right here. I basically started the month at $43,280, and if you look at it, I'm up here now. Um, and then also, when I update my spreadsheet for the month, you will see when I update my spreadsheet, you will see I'm doing pretty good for the month. So this is, I haven't even updated, it's not even a full month yet, but this is sort of what it's going to look like depending on how the market moves. So, um, beginning of the month, I was at $51,000 saved up. Now I'm at 61,000. Um, I've knocked off $1,500 from my debt, and I've also increased my dividends roughly $400 a month in one single month. Um, there's been a few videos on YouTube. Just here's what you should do with your stimulus. Um, I did a few things. I mean, obviously, as you can see, so I had the tax return that came in, the state return, a paycheck. Well, actually, two checks. Right at the beginning of the month and right in the middle of the month, and then also the Biden stimulus. That's a lot. That's a lot of money for one month, especially once you include the tax return. Um, if you notice right here, there's just different little tick marks here, and I like to mark these off. You can insert a comment onto Excel. You just basically click on the cell and you just hit insert comment. There's definitely going to be a few comments because there's just significant amounts of money, and there's no way I can remember everything that goes on in my past. So there's definitely going to be comments inserted, obviously right here in the savings box. Like, where did this 800 come from? Um, Obviously, if you look at the difference between these two right here, that's significantly different. Um, just different things like that. Obviously, my IRA. I mean, look at this. March 1st, I was at that. Now I'm at 2.5 grand in there. And that's literally from just making the decision. So I had a few decisions to make. Um, and I saw one guy who tried to like classify people as like, you have these. I think it was Joseph Carlson. He had like this little scale that he used, and I don't like to use scales like that. I'm like, if I get roughly something like huge like this, 10 grand or something like that, it makes sense that I'm gonna pay down debt on my highest interest credit card. This is debt that I ran out from doing just huge improvements around my house that needed to get done. Um, But then I took a majority of it and I put it into the stock market. And the reason I put it into the stock market, so you might be like, well, why didn't you put it into like Bitcoin or something, or I don't know, GameStop? Um, there's a recovery narrative going on, and with value stocks, value is just a catchy word that people use for stocks that earn money. Kind of what make enough money to cover their dividend. Um, it's just kind of how this works. So basically, as I did this on my last video, so as rates go up, actually it might be better to go to the bonds page here. CNBC has these little quick links that are kind of useful. So if you go to the bond page, you can see these big time jumps. Actually, let me see. Where's the 10-year at? That's what everybody looks at. See, this is not normal. This right here, it's called 10 basis points. I mean, this is 9 basis points. This is 8 basis points. That's a lot. That is a very, very large jump in one single day. Um, if you look at just basically the last 6 weeks, I think it's like some crazy percent that it's up. This is all based on recovery. Some people are freaking out about inflation. The only inflation that you really need to think about is if you get wage inflation. That's really what the Fed looks at. Like the Federal Reserve is very clear. Like their base rate, the 2 year, is going to be sitting at zero until probably hell freezes over. I'll be surprised if they ever raise this thing again in my lifetime. But like the Fed is literally telling you, hey, this isn't inflation. This is temporary. And you can see it in the numbers. Whenever people run out of stimulus checks, the consumer numbers go back down to where they were. So that you're going to get these big time, everybody's going to get hired again. You're going to get these big time rushes because everybody, I think the national savings rate right now is still at like 15% or something like that. It was at 33% at one point as people just literally held on to money. But yeah, it's one of those things where it's like once all that money's spent and everybody's out and they've partied it out and they're run up debt again, and everybody's just back out there again. They're not going to do another stimulus. I don't see that happening again. Maybe, never know. But I don't see them doing another big stimulus like that. But you know, this is going to go up, and then at some point they're expecting this to go back down. I'm thinking from what everybody's saying, and I've talked to some people on Twitter about it. I had a whole conversation. I'm thinking this is going to settle out around 2%. So this has a ways to go. This is a long way to go. And if you want to see what that's causing in the market right now, I mean, this is the NASDAQ. So typically what's been going on is every time you see a 0.03 right here, or right here in the 10-year, this is just kind of like an observation that I made. It knocks like an entire percent off of the NASDAQ, which is a lot of money. So, and literally what's going on is borrowing costs are going up. So I guess Netflix was the greatest example of that. To make all these movies and this whole catalog of movies that they have now, they had to borrow a ton and ton of money. Netflix could not have happened in the 90s, the 80s, the 70s, the 60s, not just because of technology. It couldn't have even happened up until 2008. And the reason why is because of how much insane amount of money that they had to borrow to make that content. So borrowing costs were basically negative for these big corporations. They were able to auction debt at just some very, very low percentages. Tesla would never have happened. Amazon would never have happened. Like Amazon took on a massive amount of debt to be able to build out these massive warehouses and buy up these massive planes and stuff like that. When your rates start to go up at these kind of rates right here, it very quickly, some of these companies are barely posting earnings that are past, if they're posting earnings at all. Well, now all of a sudden their borrowing costs are going up. So this is why the NASDAQ specifically is tanking. It's because they still have to take on debt, but now they're taking. It's almost like the government. Yeah, we have all this debt, but when it was really low, it was so low the interest you wouldn't even notice. If it was like 0.01% interest or something crazy like that, you wouldn't even notice the interest. Well, when the borrowing costs go up, like you're seeing here. Well, now all of a sudden you're going to start noticing that interest again. Everybody's going to start talking about being deficit hawks again. That's the next shoe to drop. Um, I wouldn't be surprised if 2 years into Biden's presidency, they're already all talking about like bringing down the federal deficit, the deficit and stuff like that. That's why everybody was like, if you're going to borrow, you need to borrow now. So that's kind of what's going on. And the Fed has basically told the market, we're not we're not coming in here to back you guys up. You're on your own. There is still that bond rule that we're waiting on, the thing that expires on the 31st. There's no telling. Powell was asked about it most of the time, or a lot of yesterday, the SLR rule. Um, everybody thinks they're going to extend it, but there's no guarantee. If they don't extend it, this is going to 2%. I can promise you. And it's going to be a nasty, very, very nasty. It's going to be very nasty next week. If they don't extend that, come next week, it's going to be very nasty in the market. Because even though the Dow is made up of a lot of companies that can support their earnings and support their dividends, I mean, even then, you're going to see borrowing costs go up. Um, I have to remember what it was at, but I mean, if it didn't take much to tank the market in 2018. If you go back to 2018, where's it at? Right here, going right into 2019. That right there, this is when the Fed was raising rates. All up in here during Trump's presidency, they were raising rates. They were raising rates in Obama's presidency too, but they really started to take off right there is when they stopped raising rates. Well, actually, right in here is when they stopped raising rates. That's when they started cutting rates like crazy. Now, if you look at it, you can just see. All of a sudden we're riding down here at 0.05, and now all of a sudden you're one full percentage higher. Go buy a house and see what the difference is over 30 years or over 10 years between a 3.5% mortgage and a 4.5% mortgage. This is what this kind of translates into. Banks love it because the 2 years stand right where it's at, and then the 10 years way up here. So they lend on the long end, or they lend on the short end, or I forgot how it works. They borrow on the short end, which were really low prices for them, and then they lend on the long end. So banks are loving this right now. So that's why if you look at like my portfolio, everything in the market's tanking. But if you look at the banks, oh, they're loving it. They're in heaven right now because they're not passing this on to you. If you were seeing this, if this is where this was your savings account rate right now, the banks wouldn't be seeing this profit, but the banks are all seeing this profit right now because they're not passing it on to their consumers because they never do. They only start passing it on to their consumers in the forms of like CDs and stuff like that. Like I haven't seen a bank have a savings rate with anything worth talking about since I was almost damn near a kid. Um, so we're gonna have to see when it settles out. The market is still kind of in this trend right now, just kind of because the Fed's not doing anything. So the Fed is not basically going in error. Because right now the Federal Reserve is buying everything that gets issued, all the debt that gets issued in this area. And then they're relying on other countries and banks to basically load up on this stuff up in here, this debt. So that's why whenever you hear about these auctions, these treasury auctions, this is what they're talking about. And we're going to have to see how it kind of goes. At some point, the Fed will act, especially on this right here. They're not going to allow this. This is their primary thing that they're supposed to control. So we'll have to see how it goes. But there was a minor dip there while I was making my video here, but just so you can see what these things kind of look like. So like I said, March has been, this 302 is not even phasing me because March has been ridiculous for the amount of money I've been able to set back. That's easily the most I've ever been able to set back. So if I do this again, so 9886, this is just 18 days into March. There's no date. Maybe here when I think, what was this? I think I added a loan or something like that, or I had money from something I sold. This right here, I don't even know what this was. this was like, there's just been no place in here where it's been anything like worth talking about that's like, I've had just a ridiculous month where it's just been crazy. I think this right here, but even this was the stimulus check. Like, this was, like, I would say, I want to say, calculator, maybe 6,000 was from me. The rest of it was from just people rotating into value stocks. Like, my portfolio is up like a lot. So if I go to performance real fast, I did get rid of things like AMC. I think that's kind of ridden. It's probably gonna pop though, knowing my luck. There's no telling what AMC and GME are gonna do. It's up today, which is hilarious. But if I go into my portfolio for the year so far, and this is what I'm talking about right here, that's a lot. But currently beating the S&P, currently beating the Nasdaq by a lot. If you own a lot of Nasdaq stocks, I seriously feel really bad for you because you're missing out on tons and tons of gains. And I know people that went heavy. I know people that put their charts out like this, saw this right here, and just thought it would never end. But if you go year to date, I mean, even today, that says what, 3.76? It's already down 2.28% today. And like I said, if the 10 year takes off like I expect it to, this is going to get way worse. This is, I think up until this week, this was actually negative for the year. If you go down to here, like, it's pretty rough. um, so we just have to see. But the Nasdaq's been outperforming anyway, so it's due for a pullback. I mean, if you look at this right here, just look at this, 70%, but then look over here, 20, 20, 40. 40% year-to-date gains is ridiculous. I don't care who you are. You only see these types of numbers when you buy at the bottom of a recession, and then you get these kind of numbers out of it. This is not normal. Even if you go back 2 years, like, this is not normal. Like, if you like, it's really, really not normal. It's like if you get a 20% year, you're like really like hand over fist, like, yes. Um, 3 years, I wasn't even that heavily invested, but this is what 3 years looks like. But you see how this one's not even moving? The Dow's having the best month it's ever had in like almost literally years, and so is the S&P, but the Dow is really having like its best month like ever. 7% of that 33% gain. So I can see why people were so heavy into technology, but I mean, it was based off of low rates. Like I showed you here, it's just like if you go to this, you go to bonds, you can see it for yourself. If you click on the 10 year, the NASDAQ started to outperform right here. Where's it at? Somewhere in here. But the NASDAQ really started to outperform, even if you go to all. It's just kind of ridiculous. Like, but the NASDAQ really started to outperform in like this area. It really just took off. But the rates were just so low, and they just continue to go low. But even this little bit right here was enough to like crimp the Nasdaq's performance. It started to go down, but now it's really like, oh, and then it just took off from there. So we have to see how it goes, but I think rates are going to stabilize around 2%. If it starts to go past 2%, it starts to head for that 3% area, I think the Fed is really going to jump in there. They're not going to like that. I don't think they'll allow that, because then you get Congress and all of them saying stuff, and then as you get closer to an election, everybody starts running on the market, basically saying, see, if you elect us, we'll make the markets go up. They don't have any impact whatsoever. They really don't. Um, so yeah, we'll have to definitely see how it goes. So that's kind of what I got right now. So everything's looking really good. I'm not sure how April's gonna look. Might look pretty good, but March has just been ridiculous. So, but let me know if you have any questions. Just leave them in the comments. I'll be happy to answer them. And if you have any questions about anything I put money into, that kind of stuff, just let me know. Thank you. You have a nice day.